Okay, this is Chris Mansfield, Managing Director of Davenport Wealth Management, and welcome to this afternoon's screencast. Today we're going to be talking about the implications of the Euro crisis on Cape Verde investments. Okay, so first of all, we're going to be looking at the impact of buying a property for, say, 139,950 euros, which at current exchange rates for the euro would value at £118,258 in sterling. And the figure you see here you're looking at is the current rate of the escudo, which is the local Cape Verde currency. And as you'll see, it's pegged exactly to the euro on a one-to-one basis. Now here we have all the bad news Google at the moment. As you see, the sky is falling in on the Eurozone. Everything is going wrong. It's bad press, it's bad value, you're going to lose loads and loads of money. And of course, this isn't necessarily the truth, but what happens if the euro were to fall? Does this mean that my 139,950 euro hotel suite is now totally decreased in value? Well, let's go back to the screen we looked at in the first place, and we're here looking at the pegged rate and the exchange rate and the current sterling value. What happens if the 1.18 exchange rate were to plummet drastically? Let's go back just a few years where the exchange rate was actually around 1.6. Now, what does that mean to the value of your property? Well, if that were the case, then technically speaking, on a direct comparison, your property would be worth £87,468. Or would it? Because it's not actually that simple. Okay, so here we have the escudo in Cape Verde Islands, and it's currently linked to our friend the euro, and it's pegged on a one-to-one basis. And of course the reality is that if the euro were to collapse, then we have choices. The escudo could choose to peg to another currency, or it could choose to change the rate at which it is pegged to the euro. So what is pegging? Well, pegging is a fixed exchange rate system where governments try to keep the value of their currencies constant against one another. Key thing here is that the countries are actually controlling this themselves, so they do have the choice to change that situation. If it's no longer in their best interest, they can either adjust the pegging rate, or they could unpeg altogether and, as I said earlier, peg to an alternative currency. So if we look at the situation here where we could try and look at pegging the escudo instead of to the euro, but to the dollar instead. If that were the most viable option for them, then that of course is a choice, as opposed to actually changing the rate at which it's pegged to the euro. So in this situation we have 139,950 escudos, which at the current exchange rate to the GBP would still give you £118,258. But if the escudo unpegs, then of course it can change the rate to which it links to the euro. Let's say it changed it to 1.35, then the value of your property actually now equates to €189,213. So in euro terms, the property is actually increased in value. And the bottom line is that in the extreme event that the euro crashes, then it's not necessarily a problem, because the asset is simply reverted to being given its value in escudos. And of course, any extreme weakening of the euro is unlikely due to currency markets, which will move to support the strengthening currencies where investors are actually getting higher interest. So in terms of fiscal contagion, Cape Verde would be exposed if its trading partners, Spain, Portugal, etc., suffered a financial meltdown. This would put obviously therefore a greater reliance on tourism to be the main driver of growth and GDP, which of course why most people are investing in Cape Verde in the first place, because tourism is what's going to provide the growth in the value of the property, and also of course the rental yield being received from that property. This is a commercial tourist resort we're investing in, as opposed to manufacturing premises. We feel confident that our projects would ride out any global fluctuations in fiscal policy. So we're looking at the commercial value of your assets, and as we know, with a commercial property that has one value as its bricks and mortar, but also as soon as a tenant moves in, it increases its overall value to the potential investor, because it's now generating a rental yield as well. And as long as commercial units continue to be profitable, they maintain their value, or maybe even increase. And don't forget, of course, with new purchasers buying in Cape Verde, It's very common that you put down a 45% deposit, which is secured at a fixed rate of 1.2 at the point of deposit. So the value of your deposit is a percentage of the end purchase price. So even if the purchase price were changed to be a different exchange rate or a different currency, then you still only owe 50%, 55% of the value of that property, and that's not payable until the property actually completes. And of course the deposit is secured throughout the entire building process. So in summary, the news might not be quite as bad as it seems. There are certainly good reasons for reading all the news, certainly, but take some of it with a pinch of salt. It's not necessarily all bad. And of course there are still very, very many good reasons for investing in Cape Verde. And finally, of course, if you require any other information or you've got any other doubts or questions, just get in touch with us through the normal channels, Twitter, YouTube, Google+, or of course you can email me directly at c.mansfield@davenport-wealth.com. I hope you enjoyed this screencast, and maybe we'll talk to each other again soon. Bye for now.